Hello and welcome. I'm Riz Khan. The US President Donald Trump refers to the Chinese President Xi Jinping as my friend, and he describes him as one of the smartest people in the world, adding that they have a great relationship. But does China see it that way? Or does Beijing view Donald Trump's tariff war as an opportunity that may hasten China's replacement of the US as the world's dominant economic power? So what are the chances of the two leaders warmly embracing in China or the Oval Office over a cup of tea or Diet Coke anytime soon? Well, in this episode, we'll hear the perspectives of two eminent Chinese economists. Later in the show, I'll be joined from the US by Dr. Liang. She believes that Donald Trump's actions have presented China with a strategic gift, an opportunity to reshape the global order in a more just and fair way.
Donald Trump has made it much harder for countries to trade, to export to the US, but it also kind of invite countries to rethink about what are the benefits of continue with the current trade relationships.
But first, let's hear from Keyu, who's a professor of economics at the London School of Economics. She was described as a brilliant thinker by the former British Prime Minister Tony Blair. Her best-selling book, The New China Playbook, Beyond Socialism and Capitalism, is a myth-busting guide to the Chinese economy and is considered by many to be a must-read for anyone doing business in China. Dr. Jin joins me now from the Chinese city of Hangzhou. Dr. Keyu, thank you for making some time for this important discussion. Now, looking at what seems to be the most chaotic economic ups and downs in recent history, how do you see this? Do you see what's at stake here? Political pride, economic justice, or a new world order?
I would say all of the above, but especially a new world order. I think it's the world is firmly now polarized, protectionist, and politicized, and where economics was driving politics, now it's completely the reverse. But really, I do see a bifurcation, inevitable and irreversible bifurcation between the US and China, really along the tech supply chain. It's very hard to go back to where we were because of all the uncertainty that has risen that will force companies to rethink, recalibrate, and regionalize production chains and so forth, and also countries to really focus on resilience. But I think all the global supply chain trend that has been completely reversed.
We'll go into some of those issues in a bit more detail, but when it comes to the tensions that we hear about constantly in the news, who do you think will blink first, the US or China?
These are the two largest economies with two strong men in power, one projecting more power than another. The tariffs is not just about making America great again from the US perspective. It is why I believe that it is meant to hurt other countries more. So it's not just about absolute power, but relative power. So under those circumstances, given the domestic popular demands, domestic politics, I think that it's very difficult to say. Of course, China thinks at this time it's really the US that has started this. It believes that making concessions to Trump would only demand more from him, and that only with equivalent force on US companies to fuel the tariffs, just like Chinese suppliers are feeling, will it bring the US back to rational discussion.
But Dr. Jin, do you think there is a route that lets both these two proud leaders save face?
Well, the off-ramp, it's very hard to imagine what that looks like. Now, I think that they were probably having discussions, hopefully side discussions. There are people who are familiar with both sides doing some of the work. I know that there's an intense political discussion within China on what to do, which signifies that there is scope for at least taking the temperature down and room for negotiation, which I believe is also in what China desires. But exactly who's going to blink first, that's really hard to predict.
Now, in your book, The New China Playbook, you argue that China's economic model is misunderstood. Why?
Well, first of all, people think that China is an extremely centralized country and everything, all the decisions are made on the top. the more accurate way to describe it is that it's political centralization, but coupled with an extreme form of economic decentralization. The mayor economy, which I describe in my book, really showcases how radical reforms were implemented, but also currently how the most important dominant strategic technologies arise in China. They're not just a centralized decision. For instance, EVs or solar panels, they're spread around 80 cities across China, and everybody's competing. Local governments are competing with each other like they are in a beauty contest to vie for the best private companies. So this kind of model is very difficult to replicate elsewhere. There's a political and economic incentive because local government officials want to be promoted, so it's in their interest to do a good job in the economy and in technology. But this is really what has driven China's growth model.
I wonder then, Dr. Jin, what Donald Trump's approach to tariffs tells you about his understanding of the Chinese economy.
Of course, very little. First of all, it's true that China has a trade surplus with the US on goods, especially on basic manufacturing. But the US has also always run a surplus with China on service exports. The things like financial, tourism, medical, students, etc. But also it exports more high-tech components to China. That doesn't seem like such a bad deal. And in fact, if you really want to lock China into a low-tech, low-value-added, low-margin position, you want to lower the tariffs on China's basic manufacturing rather than make them higher, in which case, what do you think China's going to do? China's going to do more of the higher value added because it's going to tariffs adjust and reallocate resources toward these advanced components, which goes directly head-on-head with the US. But more broadly speaking, it is an absolute fact that China has exported deflation to US and especially beneficial to US consumers at the lower income household level. If you look at the data in the last 20 years, all the rise in the price increases in the US come from services, not from manufacturing. And that has tamed inflation and allowed for more investment and obviously greater capacity to growth. All of that is under jeopardy.
From what you know, are there people in the Trump administration who do understand China better and are being ignored? Is it a case of, they're too scared to speak up or simply just not being heard?
Well, I think what this has proven is that no political system is immune to a one-man show and not immune to political loyalty trumping economic pragmatism. All the criticisms that America has around the world, I think it firmly applies to itself. Of course, those on Wall Street in the financial sector, in technology, in business, find the irony of these tariffs. But very few people are really speaking up. I think that someone like the Treasury Secretary understands the implications of not just hurting China, but the huge volatility, uncertainty, and also just the injustice because all this information asymmetry benefits the financial elites who have access to these information. And it ultimately hurts the American people, it's especially regressive and also regressive on developing countries as well.
So if you were advising the current US policymakers, what would you tell them about the best way to engage constructively with China?
Well, first of all, I think the US should not be fearing a comfortable China. It should be fearing a more constrained China. And I'll give you an example of the semiconductors. American lobbyists in the 1990s went to China and lobbied for more imports of American chips. Guess what happened? The whole industry in China stalled. Why would you want to plow a huge amount of resources and spend on research and innovation when you can comfortably import it from America? The sector only accelerated and filled in major gaps and capacities after the export controls and bans, and now it's near domestic sufficiency. Even with gaps, China is now fine. So I would say make China comfortable is a starting point. You shouldn't fear it. Of course, There is national interest in the national security stuff, the technologies that are very critical for military capacity. I mean, both countries' national security and security interests have to be respected. That is fine, but compartmentalized. There are areas in which you would need China to collaborate, especially if we have a looming global financial crisis on the horizon, now more likely than ever, on climate change, on many collaborative efforts, especially if there's a global pandemic. And the two central banks are going to have to talk to each other. I cannot see that the dialogue is going to end right there.
With the way things are going, is a decoupling between the US and China inevitable? And if it does happen to any major degree, is it actually reversible?
I think decoupling is too strong of a word and it's too broad as a concept. I first of all argue that the tech supply chains, advanced manufacturing and semiconductor is on its way to bifurcation, one led by US, one led by China. Pivotal economies like Japan and South Korea want to have a foot in both. They don't want to just be in one camp, not only because of US unpredictability, but also because of opportunities that have arisen with greater tech autonomy in China. I think there will still be trade and degrees of normal investment in two countries. That is inevitable. But I think in certain areas, the bifurcation has already happened, especially in the parallel tech developments. There is no convergence to be seen there. But also, I want to just remind everyone that when China gained the most favored nation status in the 2000s, it wasn't about lowering tariffs. Tariffs are already very low. It was having eliminated all the possibility of a threat of a tariff war and from the US. And that has led to an expansion of capabilities, trade, and global innovation. Now that all of that is being reversed.
When you talked about unpredictability, can you recall any time in recent history where there was this level of unpredictability?
In fact, if we look at all statistical measures, whether it's coming from policy uncertainty or geopolitical uncertainty, at least in the last 20, 30 years, it's never been as high. So I think that companies are now factoring in these risk uncertainties, and that's going to be very costly. You know, it's not just about inflation. All the prices are going to rise. All the efficiency, all kinds of progress in the end is reflected in consumer prices. And they're all going to rise around the world.
Knowing the US as you do, what do you think are the Chinese exports that Americans could not live without?
Well, I hate to say this, but I don't really see America making its own textiles and apparels and toys. And even if some of that demand will be filled by Vietnam and Bangladesh, I mean, these are still small economies, and it would look like a pretty bleak Christmas. At the same time, China, it's true that the U.S. is not really no longer a great manufacturer, competence and capabilities. And the most important exports of China is not really just the final goods, the ones that I mentioned, but it's really inputs. If you look at the data again, China is the biggest exporter of auto parts to the U.S. But leaving that aside, all the inputs goes into firms' capacities and competencies. They raise productivity, they increase profits, and so this is going to lead to a profit squeeze for U.S. companies, and they will be passed on to consumers. So it's not so much one single thing that they can't live with. It's actually all the intermediate products, which is a very complex portfolio of inputs, and they interact with each other, whether it's downstream or upstream. And all of this efficiency is going to be upended.
And Dr. Jin, you've probably seen the memes going around, videos obviously produced through AI, I guess, showing Americans, very large, overweight Americans in rows behind sewing machines with a tagline that says, "Make America Great Again." Is it that Americans don't want those kind of jobs? Is it that it's too expensive to have those kind of jobs in America?
I think the irony is that they haven't understood that all of this is just a cycle of renewal. Soon enough, Chinese people will not be wanting to make these things either. the Chinese new generation have no interest in manufacturing jobs. There's a gap of 25 million job openings in manufacturing, while there's huge youth unemployment. Guess what? They don't want to do that stuff. So it's all about time, all about a country's cycle. And when they become richer and it's the new generation, do you know what they want to do? They probably look more like Americans, wanting to be influencers. Actually, they already are influencers. They want to open their local coffee shops and restaurants and do more services. Service is only 50% of GDP in China, but over time that will increase. That would be a good thing for China as well as reducing international tension. So you just got to let a country play out the natural cycle, and a lot of these manufacturing will be shifted to other countries, although, of course, AI and robotics will pose a very different kind of question on that trend as well.
Taking into account what you just said, that there are so many jobs in manufacturing that young Chinese people don't want, and their aspirations are perhaps more Western in stereotype, how effective in reality could the non-tariff measures that China has threatened be? For example, banning Hollywood movies?
I think it's very unfortunate that this has gone beyond narrow sense of trade and even finance, but it's permeated culturally. It's the person-to-person exchange that actually has bolstered and supported the deteriorating relationship between the two countries. That exchange has been so important with Chinese students going to American universities and vice versa. It's the still aspiration of many of these Hollywood scenes and movies in China that brings China closer to the West in a very harmonious way. All of that is also to be, made as chips in this trade war, and that is very unfortunate. So my fear is that the bifurcation goes beyond the tech splintering. If the Chinese companies are demanded to delist from the U.S. Stock markets, that's a bad thing for Chinese companies and Wall Street, although it's a very good thing for financial centers like Hong Kong. And the more you boost Hong Kong, the more you actually make China look good. So I'm not really sure that this is Washington's intention. But just coming back to your issue of culture, really, if you ask an American and Chinese who have been to the countries and who know both, nobody wants this. They are so frustrated. They think it's actually quite stupid because they're not really enemies, even if they are competitors. But I think with the rising sentiment, especially with these very prohibitive tariffs and the sentiment that actually the end game is against China, the rising consumerism will seek more local substitution, even away from companies like Apple and Tesla, which are still very much welcome in China.
The rhetoric that's come out of the Trump administration from the president and the people around him has been quite extreme compared with what people have heard in the past from the US government. And the vice president, J.D. Vance, used the term Chinese peasants when he talked about US-China trade policy. And I wonder how that would be received in China, how people would respond there.
Well, I think that the concept of peasants, farmers, I don't think that really arouses such a huge emotional response. However, I found it quite shocking, as well as other people in China, that J.D. Vance's statement that globalization only worked when developing countries were stuck doing manufacturing, as if they were not supposed to be catching up. That was the only form of globalization that was acceptable. I found it really shocking that this came from the words of a vice president of the United States of America, with all the moral universalism and moral compass that it has paraded all these years. To say that it only works when the developing countries are stuck really rings a very sore tone here in China, I'm sure in the rest of the world as well.
I almost hear universally from Americans who visit China for the first time how amazed they are with how developed and forward-thinking China is, and how the infrastructure is way beyond anything in the US, according to what they see. So it sounds like most Americans have absolutely no clue of what China is really like once you're actually inside and see how it has progressed and futuristic it is.
In almost all of the cases, when Americans actually visit China, their attitude towards China is much more positive. And I think that that is a good thing. We do need more visits from Americans and vice versa. Look, I think China has done remarkably well, leaving, despite all the challenges that it is facing. Sure, economically, it's still fragile. It hasn't had necessarily the best policies in the last few years and have gone a little bit off course into other directions. Yeah, that's true. But for the large part, 800 million people, maybe even more out of poverty, the infrastructure that you mentioned, and it's not even just traditional infrastructure. It's infrastructure for the future. It's the most advanced and most broad and most mature, expansive in China, the digital infrastructure. They're also helping other developing countries build that out. Yes, the tariff war is going to have an negative economic impact on China. But, the Chinese companies are very adaptable. They're very resilient. It's not a great thing, obviously. But even since Trump 1.0, they have sought alternative markets. They have moved production lines, but they've also even changed business models to suit the new world. Regionalization, fragmentation, block economics, and all that. And on top of that, look at technology. China was seriously worried that it will be choked off of these critical technological components after the export bans and controls. What's happening right now? Not only near domestic sufficiency, but countries, the very pivotal countries, all at least having a foot in China's tech chain, goes to show that the danger is a lot less than what it was a few years ago. It is a resilient country. It is a country with many, many problems, just like other countries, but it is not really possible to say that you're going to stop China from advancing.
I think also people forget the remarkable history, centuries, millennia, that China has had, a remarkable culture and contributed so much to the world. And of course, Chinese are, like many people, very proud of their country. So I wonder, to what extent have the words of J.D. Vance and Donald Trump had in terms of making Chinese people more supportive of the retaliatory actions that the Chinese government is proposing against the US in this tariff war?
Well, you're absolutely right that the country is quite united in its in the response, in a very strong stance against Trump. They know that the economy will suffer, many companies will suffer, but yet they still have that response, in part because they think that it's the problem that US has triggered, that it's highly destructive, but also will be destructive to the US as well. They believe that, the nation needs to fight. And I think the quote was fight until the end. So the Trump shock, the external threat, has really unified the Chinese people and even given more legitimacy to the leadership, even under certain this kind of economic weak situation. Again, I'm not sure that's what Washington, D.C. is striving to achieve, but also the unintended consequence of all of this, right? Nobody especially the good companies, they don't lie flat, to paraphrase a Chinese saying for giving up. They are more mobilized and more incentivized than ever. But I also believe that just realistically, without any kind of emotional reaction to the noise, they have been preparing for this for a long time. And yes, it is not ideal. And actually, it's really very not ideal for the rest of the world, but they will be fine.
So you, from what you know, China actually has been in fairly long-term preparations for the potential of this kind of tariff war.
Indeed. Since Trump 1.0, it has actually set off a globalization frenzy among Chinese companies. If you look at the surveys, about 80% of small and large businesses have already thought about or in the midst of implementing a globalization strategy. It really pushed the Chinese companies to think about opening other markets and to change their business models. And again, of course, one of the biggest effort has really been in technology. The Chinese government has launched what's called an AI Plus program, AI in every single possible sector. This tariff war has also given the government compelling justification to stimulate aggressively, to subsidize strategically, and to pivot into new directions. and has given the whole nation a reason to sharpen their survival instinct. So it's been a long march, and as you know, the Chinese are very good at long-term planning. And what I find ironic is while Washington, D.C. leverages short-term interest, China is now seen to be an anchor of longer-term stability in the global arena. And of course, it's indirectly an opportunity. You see that now many countries are coming closer to China, including Europe. The trilateral discussion between South Korea, Japan, and China in March 2025 commits to closer engagement in all ways, especially amid the global uncertainties, not to mention the developing world, which sees China as a leader in investments, in trade, and in technology as well. And the DeepSeek moment, really, I want to raise this because a few years ago, we were still debating about peak China. Now it's all about the DeepSeek moment, that despite a gap, China's still at the very forefront of this technological race. And what matters in the end of the pervasiveness of the technology in the economy is affordability, accessibility, and adoptability. And here, China truly has an advantage.
Well, Dr. Jin, even if the trade war was resolved tomorrow, what would be the lasting impact on China?
I think that what's been done cannot be undone, and many things are path dependent. Once you've gone down one route, it's very hard to come back, because all of the massive fixed cost involved in building new factories, relocating to new places, the businesses planning, and also planning for uncertainty. It's a very complex process, especially when it involves so many different inputs and the interaction between inputs, and also just that really degree of trust, right? Once that's lost and confidence, it's very hard to rebuild. And I think where the world has been going in the last 10 years, since the global financial crisis, it really does indicate a very different trend. And I see that it's not just an end of a US hegemony or a rise of China, but that it really is the rise of many different powers, a distribution of economic opportunities and wealth and technology all around the world. So we are in a different world. The rise of geoeconomics is very real. The fusion of geopolitics and technology and economics all meshed together is a very real thing. It is no longer just about efficiency. It is a much more complicated process. China's going to factor that in, but every other country is going to factor that in. Any kind of business with a long-term view will factor that in. And just like Brexit being very pretty much irreversible, I think this bifurcation is also as well.
Well, after the US-China trade tensions from the previous Trump administration, when he was in office the first time, many Chinese companies moved their operations to other locations such as Cambodia and Vietnam to avoid tariffs. But of course, those countries have now been hit pretty heavily with tariffs. So does this signal the end of that particular strategy?
I think all companies are recalibrating, and it is impossible to make any decisions currently. Chinese businesses have at least a relative advantage of being quite quick on the feet and changing some of the business models and finding loopholes where there are. So I think that all of this is going to shift the model towards greater digital supply chains, much more flexibility supported by cloud industry. Look, the opportunity for China, at least, is really in the service trade. China only accounts for 6% of services, and service trade is exploding. It's rising much faster than goods trade. And if China is pushed away from one thing, again, it's going to go to another thing, and Chinese businesses will quickly adapt to that. But of course, kind of tightening their belts, working harder, working under constraint and stress, it's something that Chinese companies are used to.
Where things stand right now, Dr. Jin, what do you assess as the stronger economy, the US or China?
Well, unquestionably, U.S. is the richest economy in the world. It is undeniable that it's the most technologically advanced country in the world. There is a fundamental difference, a very fundamental difference here, and that is, first of all, the U.S. tolerates to a much greater degree than China, or I'd argue most of other countries, financial volatility, inequality, outliers that range from the likes of Elon Musk and great geniuses to also psychopaths. And that's what, the outliers really push an economy forward. China's a little bit different. It emphasizes more on homogeneity, on the average. It's very low tolerance for volatility and instability. And if you look at the financial system, the US dominates the financial system in the world. And the financial system is really, I think, one of those fundamental reasons why its technology is so dynamic, because all the activities, all the liquidity, all the incentives that are in place for these companies to strive. So in that sense, America is very strong. But even with pressure on the lower income households, it's not as if the US economy is really going to buckle. It's going to lead to greater inequality, but that's something that a lot of other countries cannot tolerate.
That's actually what I was thinking, because when you said it's still the richest economy, it doesn't necessarily mean it's the most resilient, but you're saying that it does have the capacity to bounce back quicker.
Well, it is resilient in the sense that its greatest asset is still human capital, and talent tends to go to America, where it's still perceived to be a lot of opportunities, but also the dollar and the safe haven aspect. If the global economy really falls tomorrow, guess what? Capital is going to reallocate towards the US. At least in the short term, it is still resilient. And so I don't know what the whole kind of anguish really is about America. America has all the IP, it has the best technologies, it has the strongest financial services, its international banks rule the world. It doesn't do manufacturing. So what, right? And so on the other hand, China is also very resilient. It's very difficult to say which one is more resilient. It depends on the circumstances. It depends on the different political agendas. But, that cannot be said of all other countries.
What has this latest trade war done to where the dollar stands in terms of its significance? Is there any chance now, with countries seeing the unreliability of America, that the dollar could take a hit in terms of its significance globally?
President Trump has just accelerated the de-dollarization trend. Already, the dollar's popularity has been on the decline. The non-conventional currencies, even leaving the RMB aside, have risen from 2% to 11% in the last 10 years, which is actually quite remarkable given that kind of pace. And I think the West, and in the US in particular, is completely underestimating the huge undercurrent that is happening around the world to build alternative systems, payment systems to SWIFT, like mBridge, like CIPS, and the BRICS currency and the common currency, and also digital currency, stable coins and blockchain, all these technologies that enable the greater facility to use non-dollars to make transactions and to invoice in trade and to make investments. I think the reigning superiority, or the reigning advantage the US still has, is the deep liquid financial markets and the US Treasury markets. You hold US, you have to have assets behind, and that's what the dollar has. But even that is put into question, as the US Treasuries is no longer be seen as a safe asset, given the circumstances. And look, a few years ago, everyone was talking about de-risking from China. Now everybody's talking about de-risking from the US as well. The point is to not be at the mercy of one single country in anything.
How important is economic superiority to China's foreign policy?
Well, that's a very interesting question. China always put economic pragmatism, since Deng Xiaoping, ahead of everything else until recently. You had a more confident China in the last 10 years, confident of its economy, confident of its growth, of its technology. And you saw that China swayed a little bit away, veered a little bit away from economic growth as a central agenda into more social programs, elevated state-led programs, even political control, and so forth. But guess what? The Trump threat just shocked it back onto the normal course. Now it's front and center again. Growth is back. Innovation, it's all about innovation and productivity. It's all about pragmatic economic policies. So I think where foreign policy, national security really played an outsized role, actually, compared to the economy in the last few years, that has totally reversed.
We talked earlier about manufacturing jobs and how there's perhaps a bit of a disinclination for people, especially young people, to take them on. And China is often described as the world's factory, while Donald Trump says he wants to return manufacturing back to the US. Realistically, how possible is that?
I don't think any economists think that is really that's very realistic or desirable. I think to give you one statistic, China has built more ships than the US since post-World War II. It's not just about basic manufacturing textiles. It's about the capacity, competence, and all of the investment that has taken place to make the supply chains most efficient. And also, even if it weren't for China, it's other countries that will gradually take its place. The Japan shock happened in the 1980s. Then it was the China shock. But then it would be passed on to other countries. So unless you have erect a wall against everyone and all lower labor cost countries, you're not going to bring back manufacturing as an optimal, economic strategy. And also, apart from national security, which is understandable, and basic competency, I'm not sure why that is so desired. U.S. is a knowledge economy. There's huge amount of benefits for being a knowledge economy. And let's just look at Apple. All the value added is in the U.S., not in the manufacturing segment. China would love to be in that position and climb up that knowledge and research intensive chain. And also U.S.'s financial services. It's really not a bad position to be. And also from the first Trump trade war, estimates have, studies have shown that for every steel job that was saved, that amounted to a cost burden of $900,000 for consumers.
Since all eyes are turned onto US-China relations, how important is this moment for China's place in the world?
Indirectly, this is China's opportunity. I'm not saying that for sure that China will utilize it well, but it certainly is a great opportunity, the best in years. First of all, you see that many countries are inching close to China, at least subtle changes in attitude, including Europe. There's going to be very, very high-level state-level visits from European countries to China, visiting China rather than the Chinese president going to Europe. Of course, even despite the geopolitical tensions between Japan and China, India and China, that has totally stalled. That's pushed the countries together. So what we're seeing is that the whole notion of traditional fixed alliance, that's completely upended. It's no longer just based on geopolitics. It's a very fluid, circumstantial thing. It could be based on economic pragmatism. It could be based on climate change. It could be an alliance to deal with a rupturing of the global system. China is now positioned as a more of an anchor of longer-term stability. China is open for business. Where Washington is erecting walls, Chinese premier has pronounced 0 tariffs for the least developing countries. If you look at RCEP, it's pushing countries together as well. They announced 54 sectors, 0 tariffs. What does this mean? It's taking the complete opposite approach and strategy to Washington, D.C. And where the U.S. is isolating itself, China wants to be as open as it possibly can.
A final thought, Dr. Jin. What do you see as the biggest myth that people still believe about the war, Donald Trump's trade war with China?
The myth is that it would be so damaging for China that the Chinese leadership would capitulate, will concede, that the Chinese economy cannot afford a trade war. I think that is a misunderstanding, not only of the political thinking, but also of the economic reality, where, as we have discussed, there's been a long preparation. the fact that the main challenges are still internal, the fact that China was already going on to a trend of producing more of its own domestic inputs and intermediate goods, looking a lot more like a closed economy, like the US and Europe. In fact, China is more closed than Japan and South Korea. So it's actually pushing China down a trend it was already on and shifting the focus to consumption. That's what really China needs. Big consumption. Now there's a reason to do it. There's a reason to have a huge stimulus to even force consumption if it's actually possible, and to move China up swiftly up the value chain and to get rid of the lower end manufacturing, which would have naturally gone, but it's just sped things up. And so I think China is prepared. And this is maybe why China's stance is so firm and so strong. Yes, it will be painful. Yes, it's going to hurt. It's going to bite everybody, but they'll suck it up and they'll continue to do what they were doing anyways, but with a more domestic focus.
Well, Dr. Keyu, thank you very much for sharing your very informed opinion on this very important issue. Much appreciated.
Great to be with you. Thanks again.
So, who will win the economic arm wrestle between Donald Trump and Xi Jinping? Can either leader afford to be seen as a loser? Or could both leaders somehow save face in this geopolitical face-off? For answers, we've lined up another renowned economist who has written extensively on the Chinese economy. Let's turn now to Portland, Oregon, where Dr. Liang is based as a professor of economics at Willamette University. Dr. Liang, you wrote an article at the time of Donald Trump's inauguration saying that Trump's trade war 2.0 could be a strategic gift to China. Now, based on the past couple of weeks, have your predictions come true? And if so, in what way?
Yeah, so that's a very good question. You have to be held accountable for what you have written, right? So I think China's response has been very clear that they will have the tit for tat. They will not tolerate the aggressive moves by Donald Trump. They will stand up against bully, and they will protect their own economy with policy measures. So I think it is a strategic gift in the sense that this will allow China and enable China to really rethink how to structure its economy going forward, how to rely more on domestic demand, especially consumer demand. So I think that is a strategic gift in that direction. And then last but not the least, as some people put it, Trump is basically handing the world to China now on a silver plate, in the sense that, it completely uproot the previous very unfair, unjust global trading system and his alliance with the traditional, what he called friends, right? The Western European economies, Canada, Mexico, and so on and so forth. And so I think in the sense, it is a gift to China to rewrite and to reshape the global order in a better, a more just, more fair way. So I think in all these dimensions, I do think that this presents a great opportunity. The question is if China is able to really seize the opportunity and really do what would be necessary, right, and what would be effective. And I think, again, the evidence suggests that I think China is moving towards the right direction.
Now, of course, things have gone up and down, and I know you obviously expected some kind of challenges coming from the US administration's trade policy under the second round of Donald Trump's presidency. But how shocked were you by the revelations that came through on what Donald Trump called Liberation Day?
Right. So I think the economic impacts are definitely consequential, and we've seen this in the past, couple of days or week. So for China, I think it's going to be a demand shock because the U.S. market does account for somewhat 14.6% of China's exports back in 2024. And the Chinese government has been preparing for this, right? They have been preparing since the first term of the Trump administration. So they have spent 8 years really trying to strategize how to diversify exports, how to bolster domestic market, how to build international partnerships. So I think all of this in some ways will help China to weather. Now, of course, the damages are not going to be only fell on the Chinese economy. The US economy have also sustained a very large shock. And it's not just from the supply side, because they basically cut off, right, their own kind of access to the Chinese products, including consumer goods and also, intermediate and capital goods, which are very important to the U.S. manufacturing sector. So there is the supply side shock, but there are also the demand side, right? Because with all the policy uncertainties, businesses are not investing, consumers are also having a weaker confidence in the economy. The Michigan survey just showed that the consumer confidence now has gone down by 40% in the past 4 months, now is reaching a 45-year low. So I think the U.S. economy is also being really negatively affected, not to mention the global economy as well.
Looking at the structure of things, what Donald Trump called reciprocal tariffs seem to have been based on the trade deficit with various countries. But is trade deficit such a bad thing? Doesn't it just indicate that your goods and services are being consumed?
You're absolutely right. First of all, the tariff formula, right, that the White House used is essentially to say countries run a surplus with the United States because they had unfair trade practices. They set up the trade barriers. So we need to tariff them in order to lower the trade deficit. So the formula itself, if you ask any economist, right, it's based on a very false assumption that somehow the trade imbalance is because of a trade barrier. There are actually many, many reasons for why the U.S. has been running trade deficit, for the past 50 years, right, with over 100 countries. So this whole idea of trade barrier cannot really explain that. And as you can see, the tariff rate on various countries are really very arbitrary, right, including the Heard and McDonald's Islands, where no one actually lived on it, and still they're charged a 44% of tariff rate. Donald Trump said countries ripped off the U.S. So that gets to your question, right? What these countries have done, right, to be deserved to have the sort of accusation that they're ripping off the U.S. Trade deficit simply means you are enjoying more foreign goods and services than you send to the foreign country. So materially wise, right, when you think about real resources, this is actually a gain for the United States, right? And I think this is very interesting when you think about it. I think many countries in the world do not enjoy the same kinds of privilege as the United States, in the sense that if a country runs a trade deficit for years and decades, what happens is the countries will build up, trade imbalances, and the foreign debt is going to climb up. So eventually, this is going to bring adjustments, either through the exchange rate devaluation or their domestic economy tanks, right, reduces the income and therefore help to adjust the balance of payment imbalances.
Well, this leads me to point out that China's right up there at the top of the list of nations that Donald Trump produced. And as much as, it's targeted based on the trade deficit, do you feel that there are some non-economic issues at play here in targeting China?
I think so. I think Donald Trump definitely has a wish list, and that's why he's been asking, actually, interestingly, right, requesting President Xi to call him to have a trade negotiations. So there are definitely some other economic related objectives that he wanted to get, or non-economic related objectives, such as he wants to acquire TikTok. He wants China to divest TikTok to US firms. So that's number one. Number two, he probably wants to really get President Xi Jinping's support to be able to get a peace deal between Russia and Ukraine. He wants, President Xi to maybe exert certain pressures for Putin to, fast track some kinds of a deal, which he, as we all remember, on the campaign trail, he said, we'll end the war in 24 hours. And that has not been materialized. I think he is really, in a way, in a very timed timeline right now. He wants to get the deal done, but he was not able to. So I'm pretty sure that he wants China to help on that front. There are many other, even with Gaza situation, with North Korea. So all of these, I think, are some of the things that he would like to have China's support to achieve his goals. He's definitely also want to have broader Chinese markets. He wants to be able to, also have Chinese investments into U.S., even though that also it's kind of inconsistent, right? On the one hand, he wants the Chinese companies to invest in the US to create jobs, but at the same time, he has been really talking a lot of hostile kinds of policies towards Chinese companies, not allowing them to acquire certain companies or invest in certain fields and so on and so forth. But I think, long story short, yes, there are definitely other objectives that he wants to achieve with China. So he's using tariff as a leverage. But at the same time, I think he's also not sort of he's not against the idea of a more sort of a long-term structural decoupling from China, given Peter Navarro's consistent message or advice to Donald Trump.
And Dr. Liang, how does the synthetic opioid drug fentanyl fit into this whole US-China trade war? We hear about the fentanyl tariff, for example.
Yeah, excellent point. I think I forgot to mention that it's also another point that Donald Trump demands China to cooperate more on the fentanyl issues. And again, the accusation is basically China somehow not only not restrict these precursor to fentanyl to be exported, but China in some ways actually encourage it, right? The idea that Chinese government subsidize these producers and allow them basically to export these precursors to Mexico, to the drug cartels, and somehow then that gets into the United States. Well, I think China's position on this is very clear, right? China is willing to work with the United States for humanitarian causes. China does not believe this is really the fault of the Chinese. They don't believe that this is a justified accusation. These precursors could be used to manufacturing, drugs that are for cancer killing or for cancer patients. It could be used in a very legitimate way. And from China's point of view, it's the U.S. government's own failure to stem, the demand for fentanyl, but also, the deals, right? The drug sort of transactions. So China's position is, yes, we're willing to help if you are coming from a respectful and sincere position. We're willing to help you, but this is not our fault. So I think China sees this as a very unjustified accusation, and also the tariff on top of that. So I think, in the recent days, they have been talking about if you continue to use this kind of a pressure campaign and, using such a hostile stance towards us, then we'll not cooperate going forward.
In a somewhat contradictory manner, Donald Trump also, as well as ramping up the tariffs against China, praises President Xi and describes him as a good friend. Do you feel that President Xi might see Donald Trump in the same way in any case?
Not at all. I think, fool me once, shame on me, right? Fool me twice, it's probably not going to happen. I think if you hear some of the policy advisors, at a higher level, you hear them talk about the takeaways that the Chinese leaders have since the first Trump administration. They believe that Donald Trump is not credible. They believe that he could easily renege on anything he said. His words do not match with his actions. So those are some of the lessons that these leaders have learned, I think, from the first term of Trump's administration. They also talk about other lessons, which is that Trump is going to continue to have a hostile stance with China. Trump is going to double down with the confrontations on economic front and possibly, other fronts against China. So China needs to be prepared. This is the second lesson that they learn, right? So the third lesson, according to them, is that China needs to compete from a position of strength. So what that means, it needs to bolster domestic economy. It needs to double down on its technological investments and advancements. And last but not least, trying to, again, work with international partners to, again, sort of build the kinds of cooperative relationships with the rest of the world. So I think those are the four lessons, according to some of the high-level policy advisors I've been talking about in Chinese social media, that, again, Donald Trump is not credible. We need to be ready for confrontations by bolstering domestic economy and by working with international partners.
Interesting you say that about Donald Trump not being credible from the advisors you speak to, with two such strong characters and so much pride at stake. Which of the two leaders do you expect to finally emerge with the most credibility?
Well, I think you're right. These two are both very strong men, right? They don't want to show any weakness. For Xi Jinping, I think in their calculation, if you show any weakness, then Donald Trump is going to step up. They're going to demand even more. There has been a phrase that have been, again, floating on the Chinese social media. It basically says if you give Donald Trump 1 inch, he's gonna, take another foot, right? So I think, from China's point of view, it's not just that the leaders is worried about humiliation, but also really what are the parameters of these kinds of negotiations? Like what Donald Trump really wants, what would really make him back down?
Well, pretty soon after he announced the tariffs, he also then turned around and announced he would suspend tariffs for 90 days on most countries, and then said it was all part of his original plan, while others believe he was panicked because of the huge sell-off on treasury bonds. Now, when it comes down to it, does China view that decision made from a position of strength or weakness on the part of Donald Trump?
Well, first of all, it's very clear this was not the plan all along. There's so much evidence for that. So, for example, the USTR, the Trade Representative, Gira, he was actually testifying in front of the Congress for Donald Trump's tariff policy when the announcement came that the 90 days pause was, going to be implemented. So this trade representative was basically grilled by the congressman and saying that how, as a trade representative, that you have no idea that this 90-day pause was going to be in effect, right? So if Donald Trump really had this policy all along, his policy advisor would have known, his cabinet member would have known, right? His press secretary would have known, but none of these people seem to have this idea ahead of time. They all have been defending the policy and say, no, the pause was not in the consideration. And yet that was a pause, right? So it's clear this wasn't in the plan all along. Now, second, Donald Trump, he himself admitted people get yippee, right? So it's clear that he's responding, right, to these mounting pressures, not only from the stock market, right? The stock market fell by about 12% after the Liberation Day, before he announced the pause. The bonds market reacted in a very different way than in the past. The bond yields actually has been rising instead of falling, right? Because usually in times of uncertainty, when the economy is not doing well, when the stock market fell, investors will go for the more sort of quality and safe assets, which is U.S. Treasuries, that usually bring down the yield. But now the yield actually was rising. And so that is very challenging for Donald Trump. He's worried about the federal, interest payment. He's worried about businesses' loans and consumer credits and so on and so forth. And then the dollar was actually weakening, right? And there was 3 million Americans protesting in the weekend after the Liberation Day announcements. So 3 million Americans out of 1,400 locations in the US, out of all 50 states and some other European, major cities. So there's so much mounting pressure from the economy that Donald Trump had to reconsider his position, right? Not to mention his billionaire friends, right? Jamie Dimon talked about how this tariff is a bad idea. Bill Ackman basically used the term, this is economic nuclear winter. And, his own cabinet member and billionaire Elon Musk is basically calling out his top trade advisor, Peter Navarro, as a moron. So again, all of these are the economic and political pressure for Donald Trump to back down. And this wasn't his strategy all along at all. He used the excuse that 75 countries had come to ask for negotiation as an off-ramp. But literally, he's responding, I think, in a very arbitrary and abrupt way to the reactions from the economy, from, again, political constituents and so on.
Well, Dr. Liang, just a quick thought on the dollar itself, as you indicated there, the position of it. There's always been the assumption that the US would never run out of dollars. Do you believe that supposition is still true today? Or could there be in reality, in such uncertain times, a change in that circumstance?
Well, that's a great question. I think there are two parts to this. Very quickly, one is yes, the U.S. will not run out of the dollars. The U.S. is a monopoly of the dollar issuance. The U.S. always had the way to create dollars, and that has been confirmed by multiple central bankers in the U.S. And also it's been discovered, right, by Elon Musk, this magic money computers, right? So the U.S. as a sovereign government, it's able to issue its own currency. That's for sure. But second is, I think the more relevant question here is that will the rest of the world continue to receive the dollar willingly in exchange for the real goods and services? Then I think that is a real question. I think, again, Donald Trump has made it much harder for countries to trade, to export to the US. But it also kind of invite countries to rethink about what are the benefits of continue with the current trade relationships where they receive the dollar, which again, the US credibility is very low. The dollar value may not uphold given what is happening. And so there is a question of whether or not countries will continue to want to send their real goods and services to the US in exchange for the dollar. So I think there will be interesting, I think, reset, right, when it comes to the global financial system, when it comes to dollar's hegemonic position, right, as a reserve currency.
On that note, the BRICS countries, including Brazil, Russia, India, and China, have talked about having an alternative currency to the dollar in order to be able to trade between themselves. Considering the current tariff war and the economic upheaval, how much is that still a reality?
Well, I think that goes back to the very beginning, right? The so-called strategic opportunity. I do think that countries have the intention and now heightened interest to build an alternative trading system. And of course, alternative payment system would be very helpful and necessary even to facilitate the kinds of alternative trading and investment system. I don't think that these countries will really come up with a alternative currency, so to speak, but I do think that they would come up with some kinds of a different clearing system. So then when countries trade with each other, they don't have to use the dollar. They could use their local currency, but have a clearing system that would allow them to trade in their local currencies, or they could have a common clearing unit that again would allow them to clear each other's trade balances to bypass the dollar. So I think this is a great opportunity. Indonesia has just joined as a new member, and there are many other major trading partners, trading countries in the world have been considering either joining or they're in a sort of a waiting in the queue. So I do think that this is a great opportunity for countries to build this alternative system with BRICS and even broaden it, right, to have even broader circles that include more global South countries. And I wouldn't be surprised as China now is negotiating with Spain and European unions. I believe many other countries, Xi Jinping is going to visit Cambodia, Vietnam, and Malaysia in the next few days. So I think there are a lot more sort of efforts, right, to be made, how to continue to trade with each other, even without, the participation of the United States.
On that point of China being getting closer to Europe, it seems, the European Union didn't react with the retaliatory moves to the tariffs. And I wonder if you think that now looks like a smart move, or perhaps they were just a bit slow in being organized.
Well, I think there are a couple barriers, I think, for European unions to really think more strategically about how to deal with this, right? I mean, they have had this long, deep-seated alliance with the United States. And so it's a very difficult, I think, moment for them to realize the relationship is no longer the same as what it was in the past, 80 years. But I think it is at the point where they really need to rethink. I think J.D. Vance's speech at the Munich Security Summit is really a wake-up call for the Europeans that the U.S. is seems to be willing at this point to abandon the kind of traditional alliance with the European partners. And this tariff, I think, is also a clear indication of that the US is going to upend the post-war, neoliberal economic system. So I think for Europe, it's a time-tested, I think, decision-making moment. Some European leaders seem to have that sort of reflective moment and understand it cannot continue to rely on the United States, not only as an economic partner, but also as a security partner. And so they actively seek for alternatives. But I think there are still some European leaders seem to still being sort of a nostalgia. They're still hoping that US would return, right? And I think they're still seeing somehow China as a threat, not as a partner, which I think, again, at this point, it's a very absurd idea to see China as a threat, right? China is not a security threat. China is not an economic threat. China could be a fruitful partner as far as economic relationships are concerned.
And what do these tariffs and this tariff war mean for big US companies like Apple and Tesla that have such a big stake in the Chinese economy?
You're absolutely right. These companies have been profiting really handsomely from the Chinese markets. They are also utilizing the Chinese supply chain to be able to produce their output in a very cost-effective way and sell to the global markets. I think, you hear Tim Cook, who has been talking about the reason that they have to stay in China is not because labor cost is cheap. It's because China is the only country that has the kinds of infrastructure and also kind of tooled engineers, the skilled workers that were able to support the large scale and very precision kind of production that Apple requires. So what that means are twofold. One is that with the recent rising hostility, right, especially you hear JD Vance said, we're borrowing from the Chinese peasants and to buy the products Chinese peasants made. I think, this really triggered a lot of reactions among the Chinese consumers in various Chinese social medias. You hear them push back and feel really offended about these kinds of rhetorics. So I think that Apple or any sort of the US companies will have a harder time now to sell their products within China. Their competitive advantage has already been eroding, right? These days in China, there's so many good Chinese-made cell phones like Xiaomi, like Huawei. Apple has already, met with all these competitors, right? Not now, I think this just adds more salt to the wound. It will be more difficult for them to sell at the Chinese market. So I think this will create very difficult scenario for the US multinational corporations. Even if they move their production to other countries, as I mentioned earlier, other countries like India, like Vietnam, cannot be a complete substitute for China. The scale and the quality of the production is simply, unmatched, by these countries. So it will create a very difficult situation, I think, for these multinational corporations.
On the note of Tesla, there's been reputational damage as well, of course, as the risk in terms of its attachment to the Chinese economy, hasn't there?
Right. I think that's another very salient example, as you mentioned, right? It's not just the cell phones, not just Apple, but Tesla. They already had fierce competition from the Chinese-made EVs. Many of them are, in many ways, more preferred by the Chinese consumers in terms of the price, in terms of the quality, in terms of the user features and so on and so forth. So they already see their sales declining in China's market and also I think global markets. Now I think with all these backlashes when it comes to the tariff and when it comes to Trump's administration's hostile stance towards China, and of course Elon Musk is one major cabinet member of Donald Trump. I do think there will a lot of sentiments, perverse sentiments against Elon Musk and also his products in China. So again, none of this is conducive to the businesses of these US multinationals.
And a quick thought about TikTok. What has the so-called Liberation Day announcement done to the plans or proposal to have TikTok sold to an American buyer?
So I think at this point, China does not have appetite to really consider divesting TikTok, giving again the lack of trust, the lack of credibility, the lack of parameters of the negotiations with the United States. You also hear in the recent days Scott Bessent talking about the possibility of delisting Chinese companies from the U.S. stock markets. So if this sort of trend continues, I would see less and less opportunity for the two parties to come together and have some kinds of negotiations. It seems that the tension keeps rising. And I think that's part of the, I think it's where the Trump administration is really trying to doubling down, right? It's really remarkable when it comes to Trump's sort of a plan. His plan A is let's exert maximum pressure and get the negotiations done. But when this didn't materialize, instead of look for a plan B, all he does is to go back to plan A and try to double down. And this is not going to go anywhere, unfortunately. So at this point, I think it's very difficult to see how the TikTok plan or any of the trade negotiations will move the relationship towards a better direction.
Also, the Chinese economy has been somewhat hampered by issues and failures in the real estate market. And I wonder, how much does that impede President Xi's ability to stay strong in the battle?
Yeah, I think that's a great question. The housing market was a drag on the economy, both because it directly reduces investment, but also it reduces the consumers' confidence and their household wealth. So all of these, reduce the GDP growth. But there are signs that the market is stabilizing and the government is going to, provide more fiscal and monetary support to help to cushion, right, this market. And so I do have the confidence that, as we also mentioned earlier, right, the direct trade with the U.S. is actually not a huge contributor to the Chinese GDP. So what that means is that there will be hit on the Chinese economy, but there will be ways to at least cushion it, right? Even if China is not able to, let's say, grow at 5%, right? I don't think they will deviate very far from the target, giving all these policy toolkits that are still at the disposal of the Chinese government.
In a nutshell, how important is this moment for China's place on the world stage?
Right. So going back to what I said earlier, right? I think again, there are many analysts say this is a golden opportunity for China, right? Donald Trump is exiting from the global system, right? Be it climate change initiatives or World Health or aid or now trading system. So what that means is that, when the current, incumbent leader is exiting, vacating from this global system, it pretty much opened up the opportunity for China to play a major role, right? If not a leadership role. And so again, as I mentioned earlier, you have seen China being very proactive these days, right? Talking with European counterparts, visiting, Southeast Asia partners, and continue on with China's, 3 initiatives: global development initiative, civilization initiative, and security initiatives. So I think the direction that China has set for itself decades ago will only be accelerated because of Donald Trump's, moves. So I think China will seize the opportunity and it will continue to assume positive and stable, right, role in the global system. So I think that this will be a benefit for not only China but the rest of the world. I do think that in this kinds of very turbulent, tumultuous time, it is helpful for China to play a more stabilizing role and build that alternative system to facilitate trade, investment, payment system, aid, climate change initiatives, and so on and so forth.
A final thought, Dr. Liang. What chance is there in the coming weeks we might see Donald Trump and Xi Jinping having a cup of tea or perhaps a Diet Coke or something in the Oval Office with a warm embrace, having finally reached a deal?
Yeah, well, I mean, I wanted to be optimistic, but I think having a tea, either in Zhongnanhai or in the Oval Office, it's very unlikely, according to my crystal ball. Of course, I have one, right? But I think I would not rule out the possibility that both sides pick up the phone and start talking. Right now, I think the most practical barrier is that Xi Jinping wants to have more lower level negotiations, and then he and Trump can, sort of seal the deal, because he wants to have certainty before, he appears to reach a deal with Trump, where Trump seemed to wanted to start with the very high level. He wants to have a direct phone call with Xi Jinping and talk through, this trade deal. So I think that now is probably the sort of barrier for both sides to reach any agreements in a very practical way. So we'll see. I think, again, for me, China has already made a position very clear. We open for negotiation, and we will ignore any further escalation of tariff because there's no point to do that. And when you look at Donald Trump, right, when China slapped back the 84% tariff, Trump already said, well, we will terminate any trade negotiations. But then he backed down and said, we are waiting for the call. So I do think that Trump is probably going to be the one who backed down first. But of course, he is going to find an excuse. He's going to find a pretext that would seem that he was the one who can claim victory, or at least not the one, who lose first, right? Who blink first.
Dr. Yang Liang, thank you so much for your time.
Yeah, no problem. Well, thank you so much for having me. I appreciate that.
And that's it for now. Don't forget to subscribe and leave your comments and thoughts. I'm Riz Khan. From me and the team, thanks for being with us. We'll see you next time.